Hello and welcome to another update video about Natgas. Haven't covered it for a few days, was extremely busy, but not much happened. Resistance isn't broken, so quite relieved to see that not much happened. So we are still in the same situation actually here on the Natgas chart. It's the continuous contract chart. Many of you asked for using that one again, and yeah, we've been using it for the last few weeks again. So, I mean, looking at this chart here, the Natgas futures, we can see still that a larger degree fourth wave finished in October last year. We're now likely in this fifth wave down. I think we're close to a long-term low. And yeah, we might get one or two more lows. That is sort of how I see it. It seems like it counts best like this, in my opinion, so that we've seen a wave one of wave five. That wave one bottomed in December at around $2.25. We had a three-wave corrective rally in a wave two, which could have counted as five, but it ended up a three-wave move at 340. Then broke micro support at the time, and we are coming down now in a third wave. It was very strong decline, very typical for a third wave. Then a fourth wave should still happen, and a fifth wave to the downside. For me, the current advance, the current rally that we see, I mean, I don't really want to call it a rally, you know, it seems like a bounce, just a corrective bounce, is a wave four. So at the moment, this is seen as a diagonal pattern, obviously, in 5 waves. And to me, it would look best if there was one more low in wave 5 of 3, then another 4 and 5. I cannot rule out that this is already the main wave 4. Yeah, I cannot rule that out, but would prefer if we get one more low in wave 3, then a larger 4, then the larger 5. It just would look best. But for me, the current bounce is a wave 4. So if it's a smaller degree wave 4 or a larger degree wave 4, we will see. Very open to the idea that we already have formed a long-term low. That would be my alternative, that I would say, okay, you know, alternatively, this wave 5 finished here and we're already on the move, but then it doesn't count complete yet, which I don't see as so important because there are many Natgas instruments that can be traded. They all have slightly different charts, which makes the predictive qualities maybe a little bit more muted, or it's more challenging on the smaller time frames at least, to, let's say, predict the Natgas market. It's more a risk management tool, you know, Elliott wave. So what I'm watching for is a signal that it's not wave 4 or not the larger wave 4. Then we can explore, okay, do we see 5 waves up? It's just for me at the moment from a let's say risk management perspective or from a chart point of view, it's not clear that we've bottomed yet. Therefore, I prefer to go with the trend. All right, if you believe we've bottomed, fine. I will tell you what we need to see for that, but at the moment, it's not very clear. For me, this looks more like a corrective bounce with overlapping price action. So that means essentially, ideally, 2 more lows as per this primary count, maybe just 1 more low. And if we've already bottomed, then I show you what we need to see, but it's not what I'm primarily following. I'm just following mainly 2 counts, either 1 more low or 2 more lows. No? And that depends on how high we go now, and I will give you the relevant resistance areas. You see first that we have this descending price channel here on the chart, and oftentimes what you see is that the wave 4 reaches the top of the trend channel. Now again, that would be the main wave 4. So if we get there and bounce and move down, then this here was wave 4 and probably there's just 1 more low. Looking at the Fibonacci levels, take the length of that wave 1, I go to the high of the wave 2. You see, normally what I want to see in such a main third wave, Roman wave 3, well, minimally the 1.236 extension reached, that's minimum. Ideally sort of the 1.38 or the 1.618 extension, the 1.618 was reached. So from a Fibonacci point of view, I'd be happy to say this is all of wave 3. But I can only confirm that we're now in, let's say, all of wave 4 when we break above micro resistance. And let's talk about which one that is. First of all, for this micro wave 4, which is, I think, still acceptable also in duration in the context. I have the $1.77 to $2.10 level as resistance. It's the distance traveled of the circle wave 3 to the downside. And then obviously we measure the retracements. And the wave 4 would normally not break above or go beyond the 50% retracement. So that would be too high for the smaller degree wave 4. To be honest, I don't want it to go much higher in this context. If it does, we're likely already in the main wave 4. And then I would use the upper boundary line of the trend channel as resistance. Yeah, looking at the detail here, let me go to the 1 hour chart. Obviously what you're looking for, it made a slightly higher high, I think, than the last video. So we did not break down yet, which is fine in a wave 4. I mean, as long as it's a 3-wave move, that's okay. And we haven't even broken resistance. So it's an A, B, C structure that we're normally looking for. And we're going to check if the C wave fulfilled minimum requirements. Normally what we want to see is that the C wave reaches the 100% extension level of the A wave. And I mean, very close. So it could be we get another squiggle to 186. That's at least the first ideal target for a C wave. Doesn't mean it couldn't turn earlier, it can. We've come very close. Okay, so when we get close to the 100% extension, it's often reached. So that's what I'm saying. Okay, maybe we get another squiggle higher. But as we take out those previous swing lows, it will get more and more clear that wave 4 has topped. So to really confirm that circle wave 5 is in the making, I need to see a break below that B wave low. That's at 158. At the moment, I'm not convinced yet that this C wave is over because we haven't reached the ideal target. What you could also do is add a trend line here. I'm not sure how reliable. It's probably not so reliable. It's not so reliable. Yeah, no. A bit too subjective. We have some micro support levels. I mean, structurally, these swing lows, for example, here there is one at $1.71 and there is one at $1.59. Yeah. So when they are taken out, it adds to the view that wave 5 could have started. If we continue to see it push higher, then it might be the larger 4th wave, but it would likely be a combined ABC. So if this here was not wave 4, but instead just a larger A wave, A, B, C in wave A, then we could get a B and then a C. So if it fails to really break through to the downside, we might see the larger wave 4. But as long as the bottom line is, as long as it stays corrective, I count it as one of these wave 4s. And looking at the bigger picture, I mean, also here we can define a resistance area for the larger 4th wave, really from a Fibonacci point of view, only if it moves above 225 it is. No, it's actually 250. 250. So a sustained break above the golden ratio level at 250 would suggest that we have bottomed in all of this decline that started, I think, in 2021, and that we have a long-term low struck. In addition to that, I want to see not only 3 waves, I need to see a 5-wave move above resistance. That would be best evidence we can get. But we're far away from that. 1, 2, 3, 4, 5. It needs to be a 5-wave move, and that then has to do with the internals. But yeah, that's basically it. Not much change from the last updates. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, please check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.